Should you still buy gold, or is it too late? Gold is everywhere right now. Prices at record highs. Headlines screaming, gold rally. And everyone's asking the same question, did we miss the train? To answer that, we need to zoom out. Over the last 20 years, gold has delivered over 500% returns globally, not by moving fast, but by showing up when things fall apart. During the 2008 financial crisis, while stock markets collapsed, gold rose nearly 25%. In 2020, when the world shut down, gold didn't crash, it climbed to new highs. From 2022 to 2025, global central banks added over 4,000 tons of gold to their reserves, one of the strongest accumulation phases in modern history. This buying was broad and global, led by countries like China, Poland, Turkey, India, Brazil, and Kazakhstan. When governments steadily build gold reserves over multiple years, it's not hype. It's protection. But gold isn't perfect. Gold doesn't pay dividends. It doesn't grow like a business. And after strong rallies, gold has historically seen 10 to 15% corrections. That's where emotions take over, and people panic. So, should you still buy gold? If you're buying gold expecting quick profits, remember this: gold moves in cycles, and short-term corrections are normal. And if you're buying gold as insurance against inflation, currency weakness, and global uncertainty, allocation matters more than perfect timing. That's why smart investors don't go all in. They keep gold at 10 to 15% of a portfolio, built gradually. Because gold isn't about chasing returns. It's about protecting wealth when everything else breaks. Want to stay ahead of money, gold, and global finance trends? Subscribe to Ink Tank Finance, because smart money thinks long-term.